Ha 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 ha! Boeing closes over $204 a share as they get an order for over 200 wide body jets. I don't mean it the wrong way after banging on the table and letting people know. And I don't mean to say I told you so, but there's going to be a reason I'm going to get into it. So stick around.
Want to make your money work harder? Enjoy another video with Adam Kahn, the rational investor on stocks, real estate, and crypto. Subscribe now for your weekly dose of investment insights and hopefully learn a thing or two.
Hello, my YouTube friends, and happy, Wednesday. I hope everybody's doing well. I don't mean to make a big issue about Boeing, but there's a reason I want to talk about it. I don't know if you should be buying it here. I still think the stock is really well valued. But the point of it is bad news on good companies. I had tons of people reaching out, telling me what an idiot I am. Boeing's going out of business, planes are falling from the sky, the CEO's taking advantage, all sorts of things about why Boeing was such a terrible investment. And what I was trying to get out and what I was trying to explain to people is when there's bad news and things don't look good on companies that are good companies, generally that's the time you want to be digging in and buying. You don't want to be buying when things are going great and stocks are doing well because eventually things change in both directions. I mean, my God, look at what's going on in the market. And by the way, I apologize for not putting up a video in a little while. It was my nephew's graduation, so we took a trip out to Colorado, went to his graduation, had a really nice time, and I just didn't have time to do a video. Now, that means that you want to be buying things when the news is bad and the stock's not doing well. It means it's going to hurt. You're probably going to be wrong for a while. Maybe it even goes lower. But when you're buying it during the bad news, my opinion is you're getting a good deal. You're buying it at a discount. It has gone on sale. In fact, I think United Healthcare is getting like that. Now, don't hear that the wrong way. I only bought a little bit to put it on my radar. I haven't really dug in and bought it yet because I am waiting until I see what I'm hoping for. I would say the same thing about Nike. I think that the lows that it recently made just below $60 a share is a really good opportunity. I think the panic has gotten far enough. I don't know how to explain what I'm looking for, but you want to see bad news. You want to see it in the news for a long time, continuing to get worse, which is why my thoughts with United Healthcare is despite how far it's gone, I think we're going to see lower valuations, giving us a better opportunity. At the same time, it's probably already on sale. So is Merck. So is Pfizer. Why? Because healthcare seems to be out of favor. And just like I said with Boeing, eventually things change and they get back to normal. And the companies are good companies that understand how to weather storms and continue to make money. And they're going to continue to grow. And when they're out of favor is when we want to be buying. Now, as always, this is not financial advice. Please don't listen to me. You need to do your own research. You need to reach out to a financial advisor. We're in different situations. You shouldn't take any advice from anyone on YouTube and really need to do your own research when you're making your financial decisions. Now, that being said, I love these things that are out of favor. I really like Nike, and I've been banging my hands on the table about Target. Target's one of those that's been in the news and so negative between closing down stores, which I actually see as a good thing, despite everybody talking about it as a bad thing and driving the price lower. If I'm a company and I can shut down non performing locations and stick with the ones that are profitable, why wouldn't I do that? And if I am able to use the excuse that they're having too much theft, who cares whether it's theft or just not enough traction or whatever it is? If I can get out of the places that aren't doing well and really focus on the ones that are, that's a great opportunity. Then Nike, where they're talking about OnCloud's going to put them out of business, Puma's taking over, so is New Balance. These are all great companies. I get it. But Nike has been around a really long time, and it hasn't been this low in terms of its price to earnings ratio in comparison to its potential growth and what they are, as well as the dividend yield, which isn't that high. I get it. But at the same time, that's a really good yield for the history of Nike, and it's a really good valuation for their history. So I think these are good prices for them. Target, I think, is a bargain. You add all the negative information, and eventually things change. You might have to take it on the chin for a while. You're going to have everybody telling you what an idiot you are and it doesn't make sense. But that's what I like to do. Bad news, good companies. That's when they really go on sale. And I hate to say it this way, the worse the news, almost the better it is. When it looks like it's so scary they're going out of business. Now, I'll put Google into that category. They even have me nervous because I do think search is going to change over time. But Google is a fantastic company. And when I sat down and rethought about all of it, because I think Ben's probably right that we're going to see search change, and it's possible over time that you're going to see Google lose market share to other things. But it's also possible that their Gemini is able to pick some of it up, and it's possible they do just fine. But when I looked at the valuation, you're basically paying a little more than 41 times earnings. Maybe it was like 44 or 45 now that the price has gone higher, and for everything excluding search. Once you include search, my God, it's a steal. You're paying like 17 times earnings, even with the higher prices that it's at now. But if you take search out of the equation, I get it. I don't want to be paying 45 times earning for something, but you're going to get the revenue from search currently. And yes, it could taper off, but even if it does, I have to imagine that some of it is going to be there in time, and you're going to have some of those earnings, maybe not all of it, and you're going to be able to use those revenues while the other parts of Google grow. You still have YouTube and Waymo and Android and all these other pieces and components that do have a decent amount of earnings, even at today's valuation. So if you give them the growth potential that they could have over the next 4 or 5 years, even if you're overpaying for that, in the meantime, you're going to get the revenue from search, even if it declines over time. So I see even Google, which I gave a bad review and said that he's right, because I think he is, and that I could see things getting worse for them in terms of the search world, which it could. I still think that the bad news on a good company is similar to what was going on with Boeing at the time that the bad news was coming out on them, similar to what's coming out on United Healthcare, similar to what was coming out on Target and Nike. All of these things have had bad news where people are talking about them going out of business or doing terrible or seeing no future. And it's hard for me to imagine if we go out 5 or 10 years that those companies are just out of business or they're no longer worth investing in because they're just terrible. That's the opportunity I think we want to take advantage of. And I think if you have a long time horizon, if you're buying things when they're on sale and out of favor, that eventually when they normalize and people can focus on the earnings and the growth and things like that, that's where you get better returns than just blindly buying. Now, if you don't have time to pay attention and you're not watching the news and you can't have the ability to watch all of that, there's great options to just invest in the market, which is why everybody needs to do their own research. The ETFs like VOO or QQQM, I think these are great options for people. And what I really try to get across, what I try to do for everybody, what I hope for is that everyone just puts away and saves for their future. I don't care if it goes down, I don't care if it goes up. I think having half of an investment 20 years from now is better than having nothing because you didn't invest and just thought that it was too risky and why should I bother? So even if things go poorly, I still think you're better off saving and putting away and having a nest egg than not because it's just too scary and sometimes it doesn't go the way you hope. Another thing I was looking into is, Trump really did work a really good deal depending on how it plays out with China. It may be the best deal as much as I make jokes about you guys have no idea behind the scenes it's going to be the most incredible thing ever. Like as much as I'm joking around about that stuff, I'm pretty surprised to see this might be the fairest deal we've ever been able to work with China. They're going to allow more goods from the US to be introduced and not tariffed the way they have in the past. So I don't know how familiar people are, but basically China tariffs goods 100% on average. So an American car in China sells for double what it costs in the US, which is part of why we don't sell anything there. Like, who's going to pay double what they're worth in another country when they can buy the local brands at super discounted prices? So it makes it really hard for us to sell items in China. On top of it, we keep really low tariffs on them, making it really easy for them to sell their products here, which makes it cheap for us, which we love because we're able to buy things at a bargain price. But it isn't fair trade. Well, not only did he get them to start lowering those tariffs, allowing us to sell products at a more reasonable price, he did implement tariffs. It's not the 135% that he was threatening that caused the market to collapse. But what they have done is the 10% base that they've put on everybody, and another 20% for the fentanyl issues, whether real or fake. And then they're going to go through with a fine tooth comb and decide on some other items to make it a fairer agreement. Now, like Trump, hate Trump, really doesn't matter. You need to look at the things he's doing and try to have an open mind as to whether it's an overall good or bad. And I think this one has to be an overall good, which is why we saw the markets take off the way they did. I wish I was here to do videos on it when it was happening because it was exciting how the markets were moving and it was pretty cool. I hope most of you seem like you dollar cost average usually. So I know some of you were picking things up continually as the market continued to drop. I did get nervous near the lows, but fortunately enough, I decided that one way or another, especially the set it and forget it account, which I don't even touch, things have worked out really well. And I'm thinking that the video I did a while back about by the end of the year, we're going to be having new highs is beginning to feel that way. Now, I don't want to get overly excited about it. I always want to be a little bit nervous to be prepared in case there's a pullback so that you can buy more as things go lower. But I'm very excited to see how the market's been reacting. And I'm excited what the deal was that we worked out. And I'd like to see that the other deals work out well as also. Like, we really could have a great booming economy. Now, if the stock market has caught itself, and it does continue to go higher, I wouldn't expect a big housing correction either. I think if the economy is okay, the economy is okay. We're going to have an amount of inflation. I don't know how much, but if we have inflation, that means prices go higher, and that doesn't exclude housing. I get it because it doesn't make sense to me either. If you live in areas like Las Vegas, where prices have gone up a lot, as well as the interest rates, it seems very expensive. But I use the word seems on purpose because it's just a made up thing. There is no this is what it should or that is what it should. Markets just are markets and it is what it is. So if it continues, I would expect housing prices to continue higher. And it's possible you could even see interest rates drift higher in that environment. I don't see the Fed cutting rates. I don't see long term yields coming down unless we have a legitimate slowdown in the economy. And I don't mean just CPI lowering a little bit, maybe even getting to their 2% target. It's more that I only see a real correction in interest rates if there's a real slowdown that potentially causes a recession. If we don't have a recession, there's just no reason to lower rates and boost the economy even more and cause inflation. That's the Fed's concern for all the people who think that they really need to lower rates. The reason they're waiting is until it is in the data there's just nothing to do. And I get that they'll be late to the party. I understand that they could try to be proactive, but it'll be so much more damaging to cut rates if it ends up not being needed and it just spikes the inflation than being a little late to the party. I really like Jerry and I watch the videos for the videos he does on the real estate. I'm trying to think of his last name. Forgive me that I'm having a brain fart. But either way, he seems to think based on the chats that we have in the when I make comments on his video, and he's phenomenal about responding. But he seems to think that the Fed should be cutting in preparation of the economy doing worse and whatever else. And I just think that's a huge mistake. If the Fed's late, the Fed's late. I don't think whether they cut rates today or they cut in 2 months is what's going to save the economy from being the economy. They don't control it like that. It's like trying to move a ship with a little oar. Like it takes time for things to change, and you need to pay attention and wait until it really needs to be done and not just act impulsively. Like that's why we have these people there, and everybody gets to point their finger and blame them for whatever goes wrong. But save, put away for your future. Don't blame your bosses. Don't blame the CEOs. Don't blame the government. Work on making some money and putting away and saving for your future and improving things in whatever fashion you want. Like things will be good. The other stock that looks like a bargain to me that I forgot to mention is Whirlpool. And if the tariffs aren't going to have the impact that we were worried about, which is part of the reason that Whirlpool stock collapsed or really fell lower than I expected it to, maybe they're going to go right back up. And right now, you're getting over an 8% yield to own Whirlpool. Now, I wouldn't put all my money in it or anything else. I never want to overdo things. But my God, if I can get an 8% yield on a dividend stock that I think will be okay in the long run, I think that's a really good opportunity. My only concern with Whirlpool is last quarter they only made a buck 25 and their dividend is more than that, so they can't do that forever. But they were talking about how much better the things with the tariffs were, that they see the avenue for growth and things improving. So they don't feel the need to cut the dividend, at least at this point. And even if they ended up cutting the dividend in half, you're still talking about over a 4% yield, and the company's doing okay. It's not like they're losing money. Well, at least for now. We'll see going forward. Anyway, I'm going to put this all together and edit it and try to get it posted. I know Cisco had very good earnings. At least they reacted really well. So I'm hoping that works out. And I'm hoping we have another good day tomorrow. It's been nice to see how the market's been doing. Anyway, before I forget, if you could do me a favor and hit that subscribe button, smash the like button, make some comments in the comment section. Let me know what stocks you guys think are undervalued, or let me know which ones are overvalued. Make a comment about what you've been buying. Enjoy the rest of your Wednesday. Hopefully, I'll have time to do another video tomorrow. I'm going to try to boogie and get this all edited and up so it doesn't push till tomorrow. Have a great day. Bye bye.